If I woke up tomorrow as an 18-year-old with zero money, zero connections, and no safety net, I wouldn't raise or chase stocks first. I'd treat myself like the highest return asset on the planet and build a system that prints me money before I ever think about investing it. Because the truth is, most people lose the game before they even start by trying to multiply nothing instead of creating something. And at 18, your biggest advantage isn't time alone, it's flexibility, your speed, and the ability to take uncomfortable risks without destroying your life. So here's exactly how I'd invest if I had to run it back from scratch starting today. First, I'd invest aggressively into skills that directly convert into income, not vague, follow your passion advice, but hard, monetizable skills like sales, copywriting, video editing, content creation, basic coding, and understanding how attention works online. Because if you can persuade, package, and distribute, you can always make money no matter what the economy you're in. And I treat learning these like a job by spending 3 to 6 hours a day studying and applying, not just consuming tutorials, but actually doing real work, reaching out to small businesses, offering free trials, building a portfolio, and getting proof that I can create results. Because once you can reliably generate even $1,000 a month, you're already beating most people your age. And now you have something to scale. Second, I would avoid lifestyle inflation like it's a disease, meaning no expensive cars, no blowing money on dumb stuff just to look successful, because every dollar I don't waste becomes fuel for future investments. And at 18, the compounding effects of discipline is insane. Third, I would build an income engine without touching traditional investing, meaning I'd aim to hit at least $2,000 to $5,000 per month through freelancing content or small online businesses. Because investing $100 a month into stocks won't change your life quickly, but increasing your income by $1,000 absolutely will. And once that income is stable, that's when investing actually starts to matter. And now, when it comes to where I'd be putting my money once I have it, I'd keep it simple and boring, because boring wins long term. I'd start with low cost index funds like in the S&P 500, because historically it outperforms most active investors over time and doesn't require me to guess which company will win. I'm betting on the entire market growing, and I'd automate contributions every single month, so I'm consistently buying regardless of whether the market is up or down, because consistency beats timing. And I wouldn't panic during crashes, because those are actually opportunities to buy at a discount. Fourth, I'd invest in my network and exposure, which most people ignore, meaning I'd go where opportunities exist online and in real life, joining communities, attending events, collaborating with people slightly ahead of me. And because one strong connection can shortcut years of grinding. And at 18, you have nothing to lose by reaching out. Fifth, I build a personal brand early, even if it feels uncomfortable, documenting what I'm learning and sharing progress, posting content consistently, because attention is leverage. And if you can build even a small audience and you create opportunities and partnerships, clients, and income streams that don't rely on a traditional job. And I wouldn't wait until I'm ready, because nobody is. I just start messy and improve over time. Sixth, I'd keep a cash buffer of at least a few months of expenses, because having liquidity, prevents you from making desperate decisions when something goes wrong. And that stability allows you to take smarter risks instead of panic moves. Seventh, I'd experiment with small calculated risks like starting micro businesses, flipping items, testing digital products, or running simple online offers, because at 18, the cost of failure is low, but the upside is massive. And every failure teaches you something that compounds into future wins. Eighth, I would avoid high risk gambling disguised as investing, like day trading options without understanding, or chasing hype coins, not because they never work, but because they rely more on luck than skill for beginners. And blowing up your early capital sets you back mentally and financially. And instead, I'd focus on building consistent, repeatable systems that grow over time. I'd understand taxes and basic financial literacy as well early, learning how to manage money, track expenses, and legally reduce the tax burdens, because keeping more of what you earn is just as important as earning it. I'd also prioritize health and energy as part of investing because your ability to produce income depends on your focus, your discipline, and your consistency. And burning out kills momentum faster than anything. So I treat sleep, exercise, and mental clarity as non negotiable assets. Now, here's where most people mess up. They think investing is just about money, but it's actually about behavior, discipline, and long term thinking. And if you don't fix your habits, no strategy will save you. So I'd build the habits that reinforce growth, like setting weekly goals, tracking the progress, and reviewing your mistakes, and constantly iterating. And I detach from the short term results because compounding doesn't feel exciting day to day, but it's unstoppable over the years. And if I zoomed out, the strategy is simple: build skills that pay, create the income, invest consistently into broad markets, reinvest the profits into growth, and avoid the distractions that slow you down. And if I had to break it into phrases, phase one is skill acquisition and income generation. Phase two is stabilizing income and building systems. Phase three is scaling and investing heavily. And most people skip straight to phase three without completing the first two, which is why they struggle. And another thing I do differently at 18 is I wouldn't compare my progress to others because social media creates unrealistic expectations and pushes people into bad decisions just to keep up. Instead, I'd focus on my own trajectory and measure success by how much I improve month to month. And I'd also be willing to work harder and average in the early years because the returns are exponential. Meaning, the effort you put in at 18 to 25 can set up the rest of your life if you're consistent. And I treat time like my most valuable currency by eliminating distractions that don't move me forward. Because every hour wasted is an opportunity cost. And when it comes to the education, I'd question everything and focus on learning what actually produces results rather than blindly following traditional paths, because the world rewards the output, not the credentials alone. And I'd constantly, ask myself one question: does this decision increase my earning potential or future opportunities? And if the answer is no, I'd reconsider it. And over time, as income grows, I diversify into other assets like real estate or businesses, but only if after I have the capital and knowledge to do it properly, not because it sounds cool. And I'd always maintain a long-term mindset because the biggest wins come from patience, not quick flips. And if I could sum it up, one principle, if it's this, okay? At 18, your best investment isn't the market. It's your ability to create value at scale. Because once you can do that, money becomes a tool, not a problem. And everything else becomes easier. So instead of asking, what should I invest in? I'd ask, how can I become someone who consistently generates more money than I need? And then I'd build a system to deploy that money intelligently over time. And if you follow that path, you don't just grow your bank account, you build a life where you control your time, your opportunities, and your future. And that's the real return on investment most people never think about. Thanks for watching today. If you liked today's video, please subscribe. Without you, I can't grow this channel, and subscriptions is what I really need right now for this channel to be able to grow even further than where we're at. Also, comment down below. I try to respond to every positive comment down below. Anything negative, just don't waste your time or mine. I just don't really care. Thanks for watching. Also, check out this video to your right. It can also help you on your financial journey. Take care, and we'll see you guys tomorrow. Bye-bye.